Bitcoin are number one, fair accounting. And we started with indefinite intangible accounting, and we get fair value accounting in January of 2025 that's mandatory. So there's been about a 4-year period of normalizing the accounting. I think the accounting is hostile and prejudicial to a well-run company. Just because if you can only lose money and you can never make money on an investment, a reasonable CEO or CFO would say, I don't know if I want to make that investment. And so even though the reality is you would make money on an accounting basis, it would look like you're losing money. So I think that was the first challenge. The second challenge is fair treatment as an institutional asset, via the Securities and Exchange Commission or the major financial regulators. And we started to get that January of 2024 with the approval of the spot Bitcoin ETFs. And before that point, a lot of skeptics were of the opinion that maybe it would be banned, or they're not sure it's an actual real. Citi is National City Bank. National City Bank was the bank of John D. Rockefeller, run by his brother. Okay, that tells you how far back. J.P. Morgan, right? Try to remember who founded J.P. Morgan, right? And how far back it goes. J.P. Morgan wasn't the first, right? He took it over. So what you have are these 100-year-old banks and 100-year-old relationships. And at the point that a CFO can send $1 billion of cash to their bank, buy $1 billion of Bitcoin, do it and hold it there, no risk, right? Or what they perceive as no risk, right? These are too big to fail banks. So the shareholders of Apple and the shareholders of Microsoft, they're not obsessing over the risk that Apple and Microsoft take to do business with Bank of America or JP Morgan or Citi, right? Or Wells Fargo. So that's a very important thing. When you've got all three, when you've got fair accounting, when you've got fair, securities treatment or trading, you can buy it via IBIT or via FBTC using with a call to Morgan Stanley or JP Morgan. Then the allocation might be something. But if you say you have to set up an account on FTX or Binance or offshore, or even on Coinbase, the allocation is probably nothing, right? It's probably zero. So this is a 0 to 1. So I think those first three things are what's possible for the asset to come to life. After you have those things, then there's a discussion of, well, what's the volatility? What's the performance? What's the Sharpe ratio? What's the duration? What's the holding period? What's the risk? And then what's the communication strategy? And I think that this education, it's pretty important for individuals. What we've been doing has been important for individuals. Mm-hmm. It's pretty important for family offices, especially forward-thinking ones. Fill in the blank. Another place, Paris, London, US, different country. Or even if you had two custodians in New York City, the Bitcoin can move between one and the other. We talk about the 19th century gold issue. Gold was like a settlement T plus 1 year. And Bitcoin is, in the worst case, T plus 1 hour.
Yep.
So if you people oftentimes they fixate, they think the lesson of Satoshi is don't trust any counterparty. I don't think that's the lesson of Satoshi. I think the lesson of Satoshi is if you can store your money for 1,000 years without a counterparty, you've created perfect money, right? I think, or perfect digital capital. I think that's the first lesson. And I think the second lesson is if you can move the Bitcoin without a trusted intermediary, now you've got an open global network. And what it really means is that 300 million companies can settle with each other. And that means that 50,000 banks can settle with each other. And so this becomes a settlement network, right? When we teach people 10,000 things, So I think that the institutional players, the SEC 40 trust companies and the SEC 33 Act operating companies, those are applying pressure to the crypto exchanges to become much better. But they're also the ones that are lobbying for the repeal of SAB 121, right? And the repeal of SAB 121 will result in all of the major banks in the United States and then the rest of the world starting to consider becoming crypto custodians and Bitcoin custodians and the like. And so that's, again, that's going to happen because BlackRock and Fidelity, and other megacorps talk to their senator, talk to their congressperson, talk to the regulators and point out that they want more options, and the banking lobby gets involved, et cetera. And so Bitcoin is going through this seasoning process where really it's encouraging new companies to buy it, and it's encouraging new custodians to custody. It's fragile. And the capital in the 21st century, it's going to be smarter, faster, stronger. And so the interesting opportunity is what happens when the investment bankers and the commercial bankers and the money managers realize that digital capital is smarter, faster, stronger, universal, right? Because it has a lot of implications, right? Like there's 50,000 publicly traded companies, and how many of them are capitalized on Bitcoin? How many of them are capitalized on bonds? So 99.99% of the corporate capital is financial capital, which is fragile, and you can do it in 10 minutes and you'll generate lots of beautiful graphs and you'll decide whatever you'll decide. But if we start with my base case is the risk-free return is 29% ARR for 21 years, which means that when you pitch me an idea, if you come to me and say, hey, I got a new Bitcoin custody thing, or I got a new hardware wallet, or I got, a new Bitcoin whatever banking thing, or I got a new whatever. I'm like, well, so can you guarantee me 29% plus the risk premium, which is probably 8%, 6, 8, 10%. It's like the risk premium on a mega corporation like Disney or whatever is 4 or 5%. And the risk premium on a small startup has got to be 20%. Okay. And so if you pitched me an idea and said, okay, I guarantee you 40% ARR for the next 21 years. And I'm like, and is it going to be capital free? Like I don't have to bother with it and I don't have to put any more money in later. If Bitcoin is a 55 vol ARR or 50 vol ARR with a 50 vol, 50 volatility and 50% ARR, there's a lot of people that they would rather have 20 ARR, 20 vol. Like they don't really, it's like high voltage power coming into your house. It's nice to have it, but then you don't want it in your hair dryer lest you drop it into the bathtub and electrocute yourself, right? Or on your electric razor. So you've got this big transformer box that steps down high voltage to low voltage digestible power. So some people, what they want to do is they want to lever up. Like MicroStrategy levers up Bitcoin to get to higher vol, higher performance. And that's high volatility equity. And that's why some people like our stock. And some people are degenerate crypto traders and they want 10x leverage. So if you want to have Bitcoin, you become a great Bitcoin custodian, then you trade shit coins, right? You embrace Bitcoin, you create a Bitcoin fund, then you start to trade altcoins, right? You embrace Bitcoin, you securitize it, and then you drift off to do the next thing, right? The world's full of people that they found it, and then they thought, well, I've conquered this. Now I got to do something else. By the way, I was that guy, right? When I came public, I had a good thing, MicroStrategy, the greatest business intelligence software. We grew for a decade. We conquered the world. I was like, okay, well, I've declared victory. Now I got to invent 10 more things. So I launched 10 more things. I launched alarm.com. I launched angel.com. I launched wisdom.com. I launched alert.com. I launched blah, blah, blah. It's like, none of those work as well. It's like, guess what? Just because you can do one thing doesn't mean you can do the next 10. It's like,